What if the next global crisis isn't tea about stocks or crypto, but about which metal survives the end of the dollar? Imagine this. It's 2026, and you're standing outside a bullion shop. The line snakes for blocks. People are clutching anything they can find, old coins, family jewelry, even their digital wallets, all desperate to trade paper for something real before the doors slam shut for good. On the news, talking heads are screaming about a $100 trillion wealth reset. Your bank has just frozen all withdrawals. Currencies around the world are in a freefall. But in the midst of this chaos, two ancient rivals rise from the ashes, gold and silver. For thousands of years, these metals have been the world's ultimate safe havens. Entire empires have risen and fallen on their weight. Fortunes have been made and lost on a single coin. But now, as the dollar teeters on the brink and the world's wealth is completely up for grabs, that age-old question returns with a vengeance. Which metal will truly survive the storm? What if your family's entire fortune depended on a single coin? What if the next panic isn't about what you own on a screen, but what you can physically hold in your hand? Coming up, we're diving deep into the world of the gold bugs, the silver stackers, and the new rules of survival in a world without the dollar. Is there really a clear winner in this ultimate showdown? Or will both metals be tested in ways we've never seen before? To understand the future, we have to go back to the past. Let's travel back 3,000 years to the world's first markets in ancient Lydia. Picture it. Merchants haggling over tiny stamped coins. Some are gold, some are silver. Both gleam in the torchlight, but each one tells a very different story. Gold has always been the metal of kings. It crowned pharaohs, filled the massive vaults of Rome, and was the very foundation of an empire's power. Gold is rare, it's beautiful, and it's virtually indestructible. Rulers hoarded it, built magnificent temples to it, and started brutal wars just to seize it from their enemies. Silver, on the other hand, was the people's money. It paid the soldiers who defended the empire, it bought bread in the marketplace, and it changed hands every single day in crowded bazaars. It was more common, much easier to spend for everyday transactions, and it was trusted by everyone from farmers to merchants. The Roman Empire itself ran on both metals, but a familiar story began to unfold. As emperors started to debase their coins, mixing in cheaper metals like copper, shaving off the edges to cheat the public, trust completely eroded. Inflation soared, markets panicked, and eventually the empire's money ended up worthless, thrown into the melting pot. Now, let's fast forward to the Spanish Main. Massive galleons, loaded to the brim with New World silver, flood the markets of Europe. This massive influx of silver fueled a century of boom, and then an epic bust. Prices skyrocketed, incredible fortunes were made, and then just as quickly lost as the metal's value came crashing down. By the 19th century, the world tried an experiment called bimetallism, trying to use both gold and silver together to back their currencies. But ultimately, the gold standard won out. One by one, nations pegged their currencies directly to gold, promising the world a new era of stability and trust. But as we know, that system didn't last forever either. This brings us to today. The global financial system is more fragile than ever. The dollar's dominance is being questioned, and digital currencies are challenging the very idea of money itself. So, what happens when the next crisis hits? Do we turn back to gold, the metal of kings, the symbol of ultimate wealth and stability? Its rarity and historical prestige make it the obvious choice for central banks and the ultra-wealthy. When nations need to restore confidence, they don't stack Bitcoin. They stack gold bars. Or do we turn to silver, the people's money? Its industrial uses are exploding, especially in green technologies like solar panels and electric vehicles. This means its demand isn't just tied to financial fear, it's also tied to the future of our technological progress. Silver is more affordable for the average person, making it the perfect tool for barter and trade if the financial system truly breaks down. Think about it. You can't exactly buy a loaf of bread with a gold bar, but you could with a silver coin. The gold bugs will tell you that in a true reset, only gold has the monetary history and universal acceptance to be the world's primary asset. They argue silver is too volatile, too tied to industrial demand, which could collapse in a deep recession. The silver stackers fire back that the gold-to-silver ratio is historically out of whack, suggesting silver is the most undervalued asset on the planet. They believe its dual role as both money and a critical industrial commodity gives it explosive potential. So who's right? The truth might be that you need both. Gold for preserving massive wealth and silver for practical, everyday survival. Maybe the winner isn't one metal over the other, but the person who understands the unique role that each one plays. The next few years could redefine wealth for generations to come. The question is, will you be ready? Welcome to the great financial reset of the 20th century. Imagine this. It's 1933. The Great Depression is raging and Americans are ordered to turn in their gold. Just like that, the world's money is no longer shiny metal, but paper, backed only by promises. Fast forward to 1971. President Nixon appears on TV and announces he's closing the gold window. The dollar is now floating free, completely untethered. Gold and silver are suddenly cut loose. They're no longer official money, but commodities, their prices left to the whims of the market. This moment changed everything. With the dollar no longer linked to gold, currencies around the world began to float against each other. The petrodollar system was born, making America's paper money the world's new anchor. This new dollar wasn't backed by precious metal, but by trust, a massive economy, barrels of oil, and unmatched military might. Gold and silver, now set free, began a wild ride. Their prices swung dramatically. Remember the Hunt brothers in 1980? They tried to corner the silver market, sending prices rocketing to $50 an ounce. It was a spectacular boom, followed by an even more spectacular bust that wiped out fortunes overnight. At the same time, gold soared and then slumped as waves of inflation and fear swept across the globe. The 2000s brought a whole new level of financial mania. The 2008 financial crisis hit. And as the banking system teetered on the brink, investors piled into gold, pushing it to record highs. Then, in 2011, it was silver's turn to spike again. This time, it was fueled by sovereign debt fears and a new generation of silver stackers who saw the metal as a way to protect their savings. While all this was happening in public, behind the scenes, central banks were quietly buying up gold, hedging their bets against the next big storm. But the one thing that never stopped was the debt. It just kept growing and growing. Policies like quantitative easing flooded the entire global system with trillions of new dollars. Now, here we are. By 2026, global debt is projected to scream past $100 trillion. You can hear the whispers among investors about a new reset, a moment when the entire financial order could collapse and only real, tangible assets will survive. Online, the debate rages. Gold bugs and silver stackers argue passionately. Is gold the true king of money, the ultimate timeless store of value? Or is silver the people's metal, more affordable, more industrially useful, and potentially more explosive in a crisis? Wall Street places its bets using ETFs and complex futures contracts. Meanwhile, Main Street is quietly hoarding physical coins and bars. The fear is the same for everyone. What happens when the world's traditional safe havens turn into financial battlegrounds? Why does silver sometimes soar while gold sleeps, and then suddenly they switch places? In a real dollar crash, which metal would actually come out on top, and why? Let's imagine the unthinkable. It's 2026. The US dollar, buckling under the sheer weight of $100 trillion in global debt, finally cracks. Inflation spirals out of control. Banks freeze withdrawals. The ATMs are empty. A new brutal wealth reset is happening in real time. Panic rips through the world's markets. Gold vaults are emptied seemingly overnight. Central banks try to calm the public, but their words are hollow. The trust is gone. Silver coins vanish from every shop. Bullion dealers' websites just show two words: sold out. Digital wallets and crypto exchanges crash as millions of people desperately try to convert their digital promises into physical metal. This isn't just a market correction. It's a fundamental crisis of faith in the very nature of money itself. In a world where paper wealth can disappear with a keystroke, the ancient allure of gold and silver becomes more powerful than ever. The question is, when that day comes, will you be prepared? Imagine this: chaos on the streets. Long lines snake outside pawn shops and coin stores. Families, desperate, are digging out old jewelry, anything shiny, hoping to trade it for food or fuel. It feels like a scene from a history book, but it's happening now. The government, trying to stop the bleeding, slams down capital controls. They're limiting how much cash you can withdraw, banning exports, and tracking every single transaction you make. Meanwhile, on Wall Street, traders stare at their screens in disbelief. Gold has just smashed through $5,000 an ounce. But the real story, the one no one saw coming, is silver. Once called the poor man's gold, it's now the hottest asset on the planet. Industrial users are in a frenzy. Solar panel makers, electronics giants, they're all scrambling, competing with investors for every last ounce. But there's a problem. A big one. There isn't enough to go around. Shortages are biting hard. If you order physical silver, you're told delivery will take months. Some contracts aren't even being settled with metal anymore, just cash. This creates a shadow economy. A new black market emerges, where silver coins trade for double the official price. It makes you wonder, in a real crisis, can you actually buy a loaf of bread with a gold coin? Or will silver, smaller and more common, become the only money that matters? The feeling is chillingly familiar. The panic of 1929, the chaos of the silver boom in 1980, the deep uncertainty of 2008, this moment feels just like those, but amplified. The same fear, the same confusion. It's a true financial reset. Picture two hands. One holds a heavy gold bar, the other a stack of gleaming silver coins. Gold has always been the king's metal. It's hoarded by central banks, locked away in deep vaults, and trusted by the world's elite. It's incredibly rare, dense, and lets you store immense wealth in a tiny space. But silver, Silver is the people's money. It's the jingle in your pocket. It's what paid for bread in ancient Rome and what's still traded in the markets of modern Mumbai. It's more volatile, yes, but also more affordable and far more useful, essential for industry, medicine, and our entire technological world. In every crisis, both metals shine, but they play different roles. Gold is a fortress. It holds its value against inflation and total collapse. Central banks buy gold to protect their nations. Silver, on the other hand, can soar much higher, much faster. But it can also crash harder. While governments buy gold, ordinary people stack silver. Think about it. In a true reset, a gold bar might buy you a house, but a silver coin might buy you dinner. So is gold really king? Or is silver the true money of the people? What did past panics teach us that investors today are completely forgetting? The tension is real. You feel that fear of missing out, the desperate hope for safety, and the paralyzing risk of being left behind. The showdown between gold and silver teaches us a powerful lesson. It's a warning about leverage, about who you can trust, and about the incredible speed of a modern financial reset. It's a stark reminder that the world's so-called safe havens can turn into violent battlegrounds overnight. And all the old rules, gold is king, the dollar is safe, silver is boring, can shatter in a single trading session. This panic, let's call it the panic of 2026, feels just like every crisis that came before it. The fear of 29, the chaos of 80, the uncertainty of '08. But this time, everything is faster. The risks are bigger and the headlines are instantly global. The real question is, will you be ready when the next safe haven turns into a stampede? Will you recognize the signals before the panic spreads and it's too late? The answers are hidden in the past, but only if you know where to look. Subscribe for more cinematic economic history and learn how to spot the next reset before it hits. Thanks for watching. Next time, we'll explore the forgotten crash that completely changed the world's money forever. You won't want to miss it.